Hi, this is Zach here with the US Chartbreakers, the weekend edition here at Zach's Traders Cafe for Sunday, the 21st of April. Starting off with the S&P, where we were hoping that there'd be a bounce basically at the gap there, the old gap there from the 21st of February, 49.83, the level there, but obviously we closed below that. Next level down is around 49.30, which is basically the early February, late January support zone. But given where the RSI is now, near to the oversold 30 level, a bit like it was back at the end of October, we're hoping that this market will turn around between 49.30 and current levels. Moving along to the Nasdaq 100, and here we can see that this market is also breaking down, well, in this case well below the previous gap there around 17,500. Next level down really has been broken, which was the late January support, 17,100. That leaves us with one gap to fill there from back at the beginning of January, 16,700. So I suppose that is a target that we have, and we're hoping that this market will bounce before then, especially again as this is also near oversold areas around RSI 30. On the upside, if we do manage to get back up again, we would want to see really an end of day close back above the old support there from February, 17,300. Moving on to the stocks, and starting off with an old favorite. Well, it was an old favorite until it broke down, but here you can see that we're still within a wide rising trend channel here for CXApp, and hoping that there will be a recovery within that channel. The top of the channel they're heading for $10. We're looking for that perhaps by the end of next month if we can rebound between current levels and the floor of the channel there around $2.75. I suppose the more likely scenario is that we could get back up to $7 by the end of next month, but we do have the top of that rising trend channel there from back in August last year. Next up, a company which was perhaps rather more controversial than most, Trump Media and Technology. Here we had a bear trap rebound from below the old July 2023 peak there around the $26 mark. We also managed to recover the old March support there at $32, and while we're above 32, looking for at least the 50-day moving average at $42 at the moment over the next week or two. The big trend break would be if we could break back above that resistance line there from January at 46, but currently looking for around 42 while we're above the $32 level on Trump Media. Next up, the esoterically named 1847 Holdings, and here the price action obviously has been a slightly, something of a roller coaster. We're hoping that the roller coaster will finally turn to the upside over the near term. The reason we're saying that is we've got a rising trend channel base there from back in November, top of the channel there heading for $4. We're hoping for that by the end of next month on the basis that we bounced off the floor of the channel, and the 50-day line currently around $2.35 is rising. If you're cautious, an end of day close above that 50-day line would be the trigger for a move towards the $4 area. Obviously, we don't want to see any price action below the latest support zone, $1.70. The next stock is one which we've covered quite a few times in the recent past, Indonesia Energy, and a bit of a rocky ride between around $3.60 and $6.50, and a bit of a pinball type of action that we got between those two regions. But it can be said that the longer we stay on the right side of $4, the greater the chance of another test of that top of that broadening triangle from back in, basically this time last year, as high as $6.50. We're looking for that maybe as soon as the end of this month. Another stock which is a revisit is Inseego, and here we've got a rising trend channel base. We've gapped off the floor of the channel, and top of that channel currently heading for $4.40. We're looking for that by the end of next month or much sooner, while we're above the 50-day line currently around the $2.80 mark. So that could be regarded as a reasonable risk-reward trade, especially given the way that the 50-day line is currently rising quite sharply. A stock which has been a periodic frequent flyer here has been the next one, which hopefully people will remember, Marathon Digital. Here it's I suppose a case of stock really being in a range between $15 and $30. We're looking for a fresh move towards the top of that range over the next 4 to 6 weeks. So maybe by the end of next month, we're really lucky, we'll be back up at the $30 range. Initially, the level to break is around $17.50, which was the March support for this market. Moving along to Metropolitan Bank, and here a gap off the recent support, bear trap gap reversal as we gap down, bear trap island reversal as we gap down at the beginning of this month and gapped up towards the end of this month. The weekly close above the 50-day line suggests that we'll be heading up back to February resistance as high as $46, maybe as soon as the end of this month. Moving along in the selection, and the next situation is Myomo. Here you've got another bounce off the floor of a channel. In this case, it's a falling channel around the $2.60 mark. We'd like to see an end-of-day close above the 50-day line, $3.30, which could possibly give us a follow-through onto the top of that falling trend channel from back in November as high as $4.75 by the end of next month. Next situation, Nova Lifestyle, and here quite volatile, basically in a range between around $1.50 and $5, but at least in the near term we've got the excitement there, bouncing off a rising 50-day line. That means they were all the more confident that we could head up to the top of the range at $5 as soon as the end of next month. Also interesting that basically on Thursday we gap down, and then Friday we fill that gap. So it's a gap close buy signal, all the while above the floor of the old gap from last month, $1.84. It's almost like a double or triple positive technical setup for that stock. Moving on to Neurometrics, and here another gap up situation, in this case above a rising 50-day moving average, which makes it all the more strong, and that suggests that we could head up towards the top of that rising trend channel from back in October as soon as the end of next month at $6.50, while we're above the 50-day moving average around $3.70, so a reasonable risk-reward setup there. A famous name is coming up next, which is Paramount, and here you can see that we've got an unfilled gap to the upside through the 50-day moving average off the lows, and I suppose it was a double bottom there, March-April support around $10.10, and up from there. End of day close above that December resistance line, $12.75, could take us up to the top of the broadening triangle from June last year as high as $18 by the end of next month. On to the last two. The first one is one that I think we've covered 2 days in a row, 2 episodes of this in a row. This is Ronnie Therapeutics, and a steeply rising trend channel, good support there at $6, and while there's no end of day close back below $6, we're looking for $11 at the top of that rising October trend channel as soon as the end of next month, or even sooner than that. Finishing off with a decent situation, Urban One, and here looks as though we've double bottomed there, just below the $2 level. Want to see the shares break the resistance line there from back in January, $2.55. Above that resistance on the way down at $3.50 plus. Could be on the way over the next 2 to 4 weeks. No end of day close back below $2 is obviously what we want in the meantime. That's it for me today. More updates during the week.